Hello, hello. A very good afternoon to those over in the UK. In the US, good morning. Come on, up you get. It's NFP day. It's the day that a lot of traders are waiting for. There's a lot of excitement going on across the trading room. Really great to see the numbers up. Hello to you all. Yeah, we got the jacket on today. Business. This is the first NFP we've got this year. A very good morning, good afternoon, good evening, wherever you are. From the YouTube. We're live on YouTube, so thank you for joining us. Those in the trading room, hello to you all. Let's go through them. Hello to you, Nick. Good to see you. Thanks for covering the trading room for me. Great prep earlier as well. Louis 79, Donkey 75, Kirkton. Hello to you all. Senseless 945. Good to see you. Trader 52, Kit, Conquer, Uni, Jules Sabiro, everyone's active today. Ark, hello to you. J-Dog Forex, Phoenix Blaze, Martin, Long Hauler, Pambrosio, Peter Paul, everyone's active. Really good to see. Hello to you, Hope. Headshot, good to see you. Mazar, Oliphant, Tonto, TR28, everyone. It's going to be a good one. I'm really excited for this. This is, from a trader's point of view, probably the most exciting economic event that we've got coming up in a month, in any calendar month. From an economist point of view, people sometimes say, oh, everyone gets excited about NFP, but it's not the real mover of the market. Well, I understand their point. Maybe the inflation data is a little bit more important if we're going to be picky, but this is still a good event. This is a big event, and we see huge market moves when this event comes out, and that comes out in T-minus 15 minutes. So yeah, hello to you, SH Mullen, John Max, Bruce, Clone, Mazar. All right, and good to see you all. Now, for those across the YouTube channel, hello to you. Thanks for joining. What I'm going to do is I'm going to strip this back completely. I'm going to have a look, what the non-farm payrolls is all about. Strip it down to the basics, because, there's some people who maybe have just started out on trading and they're not sure what NFP actually is, what it can do to the markets, and you can get caught out. Although the excitement's great, on a serious note, you can be caught out on this particular day. And if you may have started 2023, you wanted to join, the trading scene, then fantastic, welcome aboard. I'll break this down for you from the basic level and just go through what the NFP event is. We'll explore the three pieces of data that we get out, and then we'll have a look at what to expect, and we'll have a look, I'll chip in my 2 pence worth on that. So that's going to be really exciting. There's predictions going through. Hello to you, Cam. HR2 all, hello to you. Jetco Boss, Mark 300, good to see you. So yeah, it's going to be good. Mac Online, lots of people. Ronald, good to see you all, and Stanix. Okay, now everyone just take a breath from the excitement, which is great to see. So what we're going to do is we're going to look first of all at the theory behind it, and particularly today's one. This is the first one we've got of the year, everyone. This is the first NFP we've got of 2023, so there's going to be particular attention on it. The headlines are going to be particularly important because it is that first one out, and it's that first look at employment this year. So Mac Online just said, do you think today news will be big mover, because from the last couple of months it's not moved the market a lot? So Mac Online, what I would say is, when you probably look 3 or 4 hours down the line, you'll probably find that the market's sort of come to level itself out. But the initial move that, some people can get caught out on, or some people can make, really good profits on, is that first couple of minutes, first 5 to 10 minutes. That's when it seems to go crazy. Of course, it goes without saying, if you are already in a trade and it's running in profit, something that I would like to do on my trading account would be to, put my stop loss to my entry level. You don't want to be caught out with a big spike and have that, as people call it in the trading room, the BACs, the blown account candles. We don't want that. Okay, I hope that helps. Okay, so what is this non-farm payroll event? What is it? What is it all about? Well, NFP is probably what you'll hear it called, and it stands for non-farm payrolls. And on the first Friday of every month, we get the US Department of Labor Bureau of Labor Statistics, very official title. You can check their website. They release that on there. They basically release an employment statistics report from the previous month. So for example, for January's release, like we see today, January's release, we'll see the jobs report for December. And for February, we'll see the one for January, and so on. Now, this is always interesting in any climate, because within this report, we have a pivotal access to information on wages, job growth, unemployment. In fact, the three pieces of data that we're going to find out today are officially called the non-farm employment change, the average hourly earnings, and the unemployment rates. It tends to be released at 1:30 p.m. This is UK time. I'm going off my time. I'm over here based in the UK, and the main thing is it sends shockwaves throughout the financial world, and it really does can heavily influence policy decisions, and can cause real surprises in the markets. So when we actually explore what we're going to get from these payrolls, we're now 11 minutes, 10 minutes until go time. And just to let you know, I will be doing the raffle maybe 5-10 minutes after the action, after everyone's calmed down a little bit. So exploring the payrolls, these are the three payrolls we get. Firstly, we get the non-farm employment change, and that is essentially normally the biggest driver for the most volatility. This is probably the number you want to look at most. It shows the change in number of people employed during the previous month. And the reason it causes so much movement is not just because it's obviously vital economic data, but it's the first sight we get of employment rates for the month, because it's on that first Friday, it's on that first week. If we do get, a non-farm employment change figure, which is, slightly ambiguous, it's a bit unclear, then we can look towards, they're all important, but then we can look towards the average hourly earnings change. And the reason that's important is because it's regarded actually as a leading tool to analyze inflation. This is because if you think of yourself from a company's perspective, if companies are paying their workers more, the burden of those higher prices, those higher costs to the company, generally they get passed on to the consumers, us, the ones who suffer. And the forecast is said to be, positive growth. When you consider the volume of sort of unemployment claims recently, I'd say the near future is looking fairly gloomy for the US economy, but the labour market has been very robust. The third and final release we get, this one in the middle, is this unemployment rate. So this is one also to look at if we get that non-farm employment change is a little bit ambiguous. The reason being is because this will show the percentage of the US workforce who are currently unemployed, but they are actively seeking employment. So it's those people, who don't have a job but are looking for a job, not those people who, say, for example, are on benefits. Shep Shumba, I love how you explain. Wow, thank you very much. I appreciate that. I hope it's clear. I'm just trying to make it as clear as possible because it can be confusing to people. So that's in theory what this is all about. This is what the payrolls are, exploring the different payroll figures that we can get. Let's have a look at what we're expecting for today. Now, I've put together, don't worry if it looks confusing at first, I've put together a sort of a flow chart. And essentially what this means is I've put the most important, I think, event to the left-hand side and the least important but still important to the right, so we can sort of go along that flow chart. So first of all, we've got these NFP, that's the employment change numbers. I put that on the left-hand side because it's very, very important in my opinion. This H stands for hawkish, and hawkish essentially means that there's a threat of increase in interest rates, and that tends to be positive for the dollar and negative for equities. So you're negative for your NASDAQs and your S&P 500s. This D here stands for dovish, and you get that reverse. So that's interest rates actually at a threat of decreasing or increasing at a smaller amount these days. That's probably what dovish means these days. And that, generally speaking, dovish means negative dollar, but positive equities. So up in this top right-hand corner, you can see the forecast for today. So we've got this NFP, the unemployment, the non-farm payrolls, previously at 263,000 and forecast at 200,000. Now, that's the first number we're going to look at, and it's probably the most important one we want to look at. In my opinion, we're setting up for a hawkish surprise here. The reason being, if you have a look at, this is the jobs numbers report we've had over the last 12 months, over the last year. Only twice have we come in below estimate on the non-farm payrolls, and we've had a positive dollar as a result after the news come out. 200k I think is quite low. When you look at what we had yesterday in terms of the ADP, which is another employment statistic report, it was really, really strong. And that suggests to me this whole thing is showing that robustness of the labour market coming through. So I'm leaning towards more of a hawkish surprise, which would mean I'm looking for a figure which is around 250,000 and up. In order for us to be dovish here, I do believe that the labour market at some point is going to show significant weakness in probably a short period of time. It's probably going to be quite a sharp drop. That's obviously due to the climate, but also these subsequent redundancies that we're seeing across, multiple tech companies now. Can't remember the most recent one it was. We've seen it across loads. Amazon, that was it. 18,000 jobs being cut just yesterday. I think that was announced. However, is this a little too early to be looking at 200,000 now? Potentially, Well, another factor the reason that I think we may get this hawkish print is because we've got that seasonal employment as well. If you think about when we're looking at the jobs from December, how many short-term zero-hour contracts, part-time or whatever you want to call it, in the retail space or in the delivery space for Christmas, when you look at, the staff that would be needed over the Christmas period, we can get that seasonal boost in employment figures. That could be a factor today. So that's something that we should really look at. 5 minutes to go. If we were to get a more hawkish print, which I'm leaning towards, as I say, 250, I think will be deemed as hawkish. It's not a significant fall from the earlier, but it would be deemed as robust. That would mean, stocks down, dollar up. And if we were to get a more dovish reaction, I think we need 200,000. That's a low barrier, but if we get it, I prefer the gold up play than the stocks up play, because stocks for me will be, the move in stocks would be more short-lived, and I'm bearish on stocks, if I'm to put it bluntly. If we get somewhere in the middle ground, somewhere around that 230k, I know in the room people have voted for 230k or more. If we get, say, 225, 230, then we can go and look towards the unemployment rate, which is expected to stay at 3.7%, like it has been for 3 of the last 4 months. A lower employment rate essentially is hawkish, and a higher employment rate is dovish. The reason being, of course, because we're looking at the amount of people that obviously are unemployed, and that would show strength in the job market if it comes in at a hourly earnings. In that robustness in the labour market, that's that hawkish reaction. At 4.5% total, we went 50. Could be a situation where we get a greater chance of a 50 basis point rate hike, maybe up towards 4 minutes to go. Hope everyone is strapped in to play. I'm a little bit cautious because this is a daily chart and we can see that dollar is already ticking higher, but we have broken out on the 4-hour chart. Look at this RSI. We look down now, that's the DXY. When we look down to the dollar yen, my favorite series of lower lows, but you can actually see this RSI indicator start to tick up. So that RSI divergence is really, really important to look at. You can see it across, pretty sure it's the USD Swiss series of higher higher lows on the RSI, lower lows on the USD CHF. So if it's reaction, let's have a look at this gold market as well. As we play, gold can go. Wow, look at this huge spike between, it's quite a low barrier, to be fair. We might surprise there, we're getting this dovish reaction. Let's this 5-minute chart, 50,000 drop for most to have season are increasing. They're going to come into 1,900 if we can get a spike to there. That's that imbalance level. Are we going to get a reverse? Let's just quickly check. So that's a very ambiguous report. That's a slightly opinion. I wouldn't play it on stocks high. Play the gold higher play off the back of it. If we're going to play it at all, we're still failing to. That tends to happen when we get back higher. Again, I can't see it lasting particularly long. It's a very interesting, Aussie home. I think that's a really interesting reaction. I'm not entirely convinced by the reaction, to be honest. Down 0.1%, but that unemployment rate at 3.5%, it's falling in a time where we're supposed to be having a look at. Am I lagging quite a lot? I do apologise if the connection's not great. Is it back yet? Just let me know if it's back. Just let me know if I'm back. I am looking at my Wi-Fi signal, and I'm only on a couple of. I may have. We'll just sort of reset it. Okay. Hopefully it stays fairly stable for now. Let's have a look to see whether we can keep this dovish reaction here. I'm not sure we're going to keep this. Apologize about that. Not sure why. The best strength of signal, but there we go. DXY going down. This is probably, hopefully that does action. I'm not sure how dovish that print actually was. That's really annoying. Raffle time. Just hopefully we can Wi-Fi to do the raffle. Okay, I think we're good to go. So I'm going to click pick winner. There's going to be 3 lucky people who are going to be winning $1,000 today. So hopefully, good luck to you all. And yeah, let's see. Let's get this done. Just waiting for the stretch. We also have Kodore 50110. Well done to you. Again, $1,000. Really, really good. Congratulations. Kodore 50110 and Chalk D, congratulations to you. That is a winner. Happy Friday. That's exactly what we like to see. I'm just going to quickly make a note of that. There we have it. Okay. I think my connection's not been great, so I do apologise about that. I will come off the stream and maybe reset that Wi-Fi to see if it's a little bit better. I hope that was a good breakdown of the NFP regardless. I do apologise about the Wi-Fi connection. But yeah, interesting reactions we've got on the markets. Make sure you trade it safe, and I will catch you all